If you plan to buy a home, but you're not quite sure what it's going to cost you, then you've come to the right place. In this video, I'm going to break down the cost of buying a property and some very important items that you should keep in mind. Hi, my name is Andrew Clarke, and I'm the founder of Expanding Wallet. And I'm on a mission to teach skills for creating generational wealth. I recently launched a course to help future homeowners get their financial house in order by teaching them highly effective skills for managing their money. And here's a little bit about me. I actually started self-educating myself on how to manage and invest money starting at the age of 15. And I'm also a former real estate agent and a real estate investor, and I invest into other things as well. In this video, I'll show you how the professionals you'll work with during the home buying process get paid. Second, I'll give a breakdown of the different costs affecting home ownership for you. And third, I'll show an example of the cost to buy a home with a conventional loan versus using an FHA loan. So let's jump into how the professionals that you'll work with are paid. So real estate agents are typically paid on a commission basis. Now, I said on average, it's about 6%. Now that commission would then be split between the agent representing you in the purchase of the home and the seller's agent. So for example, if you are purchasing a $400,000 home, 6% of that would be $24,000, which then would be split between the two agents. So you as the buyer purchasing the home, you're bringing the funds forward that are gonna pay both agents. However, ultimately it's actually the seller that's going to eat the cost of paying both agents because it's going to come out of their cut from this transaction. So in that example, the seller might be selling their property for $400,000, but after the agents are paid, they're at $376,000. And either way, you as the buyer needs to come in with $400,000 to purchase the property. Okay, let's move on to another professional that you'll probably work with during your home buying process, and that's a mortgage consultant or a loan officer. And now, as their name suggests, they're the ones who are actually going to work with you on getting a loan for the property. Now, similar to real estate agents, they're paid typically on a commission basis. However, their commission is based on the loan amount that you actually take to buy the property. And their commission is usually anywhere from 1 to 2% of that loan. So if we use the example of you buying a $400,000 property and you put down 20%, then your loan amount would be $320,000. Okay, so if we use that middle range of the 1 to 2%, then this loan officer or mortgage consultant is gonna walk away with $4,800 before any taxes or expenses are taken out. Now, the next professional that you're likely to work with is a home inspector. And their job is to look at the home and inspect it so that you have a better idea of what you're buying and potentially renegotiate the deal. Now, what's been happening lately, because it's a heavy seller's market, many people are actually bypassing this home inspection altogether and therefore trying to make their offer more competitive. However, there are some risks to that because, again, part of the home inspection is giving you a better idea of what you're buying. And unfortunately, by bypassing this inspection, you could later find some costly issues with the property. So inspections have a wide range when it comes to costs. But on average, it's about $300 to $450 for a very basic inspection for about a 2,000 square foot home. Now, the price of the inspection can actually continue to go up as the house increases in size because there's more to inspect. And on top of that, you can go beyond just the basic inspection and include additional items. So what are some additional items that might be included? This could be radon testing if you live in a state where you have a basement. And also another popular additional inspection item is sewer line inspections. Some cities require property owners to actually repair damaged sewer lines. So inspecting sewer lines is becoming more important. And one other reason that I'll say that inspections are important, aside from just being able to negotiate, is actually it can help you prioritize future repairs and upgrades to the property. Having that inspection report when I bought my first property at 24 allowed me to prioritize my upgrades to the property. I prioritized safety updates first over those that were more cosmetics. Before I go deeper into the cost of buying a property, I want to find out, did anything I share about the cost of the professionals you'll be working with surprise you? Or did you think that their fees were going to be higher or lower before watching this video? Let me know your thoughts in the comments below. I look forward to reading them. Now, let's dive into the big factors that will determine the cost of buying a property. Now, assuming that you're not buying this property in all cash and you're going to need a loan, then the biggest portion of the cost of buying a property is typically going to come from the down payment on the property. So using our example with a $400,000 purchase price, at 20%, you would be looking at $80,000 for a down payment. Now, if you were to pay less than that 20% on a conventional loan, you would have to pay what's called mortgage insurance, which again, I'll talk about soon. Now, another common loan is through the Federal Housing Administration, also known as FHA. And so an FHA loan, you can pay as little as 3.5% down. And with the Federal Housing Administration loan, there's also mortgage insurance premium that has to be paid. But before we get to that, let's just quickly do the math on what an FHA loan down payment would look like. All you have to do then is take the $400,000, multiply that by 3.5%, and you're looking at a down payment of $14,000. Now, the next big factor that affects the cost of buying a property is going to be your closing costs. Closing costs have a huge variability in range. And on average, we can go with the 2 to 5% of the purchase price. So why so much variability in closing costs? Well, let's look at what closing costs actually include. First off, closing costs will include the taxes for the property you're trying to purchase. And on average in the US, that's about 1% of the property value. Another thing that closing costs will include is title search and title insurance. And that's only the beginning of the insurance costs. Let's dive a little bit deeper into the other insurances. You're also going to have to pay for homeowner's insurance to insure the property itself. All right, so let's move on to the next type of insurance that you may have to pay at closing. Now, I've already mentioned that depending on the amount that you pay on your loan, you may have to pay something called private mortgage insurance or mortgage insurance premium. And this depends on you paying less than 20% down and then which type of loan that you're getting. So if you get a conventional loan and you don't pay the 20% down on the conventional loan, you're going to be paying what's called private mortgage insurance, or also referred to as PMI. Now, even if you do get an FHA loan, you might just hear people say mortgage insurance, or maybe even just call it PMI because it's more commonly known as that. Now, the average PMI amount ranges from 0.58 to 1.86% of the loan amount. MIP has an average range of 0.45 to 1.05% of the loan amount. Now, similar to homeowner's insurance, you're going to be paying this over a longer period of time, not just at closing. And the reason for this is because mortgage insurance is actually insuring the lender, since you didn't come in with that 20% down, therefore you're looked at as a higher risk, because there's less equity in the property, which is just the difference between the loan amount and the value of the property. Okay, let's move on from insurance, and now let's talk about something else that could be included in your closing costs, and that's a homeowners association fee. Now, depending on what type of property you're buying, some properties have homeowner association fees. Typically, you see that with condos and townhouses, but sometimes single-family home communities can also have homeowners association fees. And these fees are usually for maintenance of the outside of the property. Now, the other fees that you're going to see within the closing costs are loan fees, such as loan origination fee, and if you're paying points down, which means you're paying down your interest rate on your loan, you're going to see that fee as well. And then also there could be a transfer of deed fee. Now, the last thing I want to say about closing costs and how much they can vary is that actually there's a lot of this that can be negotiated. And so sometimes you as the buyer may not pay what's typically paid by the buyer. You might actually negotiate where the seller pays. However, when you're in a seller's market, typically the seller is going to be in a better position to negotiate. Therefore, you're probably going to end up paying more on the higher end of the closing costs and be stuck with more of the costs. Now, before I put everything together and show you the final comparison between going with putting down 20% with a conventional loan versus the 3.5% with an FHA loan, if you're getting value out of this video, make sure to hit the subscribe button so you don't miss any financially empowering information from Expanding Wallet. Now, before I put everything together and show you the numbers, I want to just remind you that these are based on averages. And you'll definitely want to consult with the professionals in whatever area you're thinking about buying to get better numbers as you get closer to the time you're going to start looking for a property. Okay, so let's first now take a look at the numbers for a conventional loan when you pay 20% down. Now let's use our example of a $400,000 property. So paying 20% down on that is $80,000. Plus, we're going to take $400 for the inspection. Let's assume that it's not bigger than 2,000 square feet and we stick to the very basic inspection. Now for the closing costs, I'm going to give you two numbers. I'm actually going to use the low end of the closing costs to give you an estimate with that 2%. So 2% of the $400,000 purchasing price is $8,000. Therefore, on the low end, we're looking at a total of $88,500 in order to buy this $400,000 property. Now, if we take the high end of the closing costs, that 5%, now that causes a big jump in our closing costs, and now we go from $8,000 in closing costs to $20,000 in closing costs. Therefore, if the closing costs are at the 5%, the higher end, we're looking at $100,400 to close on this property. So with a conventional loan at 20%, you're looking at anywhere from $88,400 all the way up to $100,400. Now let's compare that to getting an FHA loan and paying only 3.5% down instead of 20% with the conventional loan. Now, because you're not paying 20% down, you're going to have to also include the cost of insurance premium. So if we pay that 3.5% down, that works out to a $14,000 down payment, which means our loan amount is $386,000. And if you remember that the mortgage insurance premium is based on the loan amount, then we can use kind of in the middle of the range I gave earlier, where that range was 0.45% to 1.05% of the loan amount. And if we do that middle, which is 0.75%, then that works out to about $2,900 for the mortgage insurance premium. So if we assume everything else on the closing cost stays the same and we just tack that on, as well as accounting for the $66,000 difference in the down payment cost, then on the low end of the range, it's $25,300. And on the high end of the range, it's $37,300. Now just keep in mind, even though yes, it will cost you much less to get into a property with an FHA loan and paying only 3.5% down, remember that you will be paying that mortgage insurance on a monthly basis. And over time, that definitely adds up. So make sure to ask your mortgage consultant or loan officer, what are the terms for that FHA loan on when you can refinance to get out of paying mortgage insurance, and that time period on when you have to wait, that has changed over time, multiple times actually. So make sure to ask that question and know up front, and I would actually literally schedule that in my calendar, even if it's 10 years out, because again, that money adds up, and money you do not want to be paying if you do not have to. Obviously, buying a home can be very costly, and from the example I showed you, the very same property can have a wide range in acquisition costs. That's why I work with future homeowners to help them master managing money so that they can save thousands more towards their first home and beyond. I teach them some of the same skills that helped me to acquire my first property at 24 years old. Now, if you're serious about home ownership and you want to get your financial house in order, then look in the description below for information on how you can work with me. And financial empowerment starts with financial education. So remember to learn all that you can, believe in yourself, and take actions that allow you to grow.